Patience is not just a virtue in trading, it's the foundation that separates those who constantly chase the market from those who learn to let the market come to them. Most traders believe they need more strategies, more indicators, or more information, but the truth is far simpler. You don't need more complexity, you need more patience. The market rewards those who are willing to wait, those who can hold themselves back when their emotions scream for action, and those who understand that opportunity isn't created by force, it's revealed through discipline. The impatient trader sees every movement as a threat or a chance, always trying to predict, always trying to control outcomes. But the patient trader understands something profound. Nothing needs to happen for them to be okay. The market doesn't owe you a signal just because you want one. The market doesn't produce opportunity on your schedule. It moves according to its own rhythm, and your job is to align your behavior with the flow, not fight it. Patience is a psychological edge because it keeps you out of low-quality trades. Trades born from fear of missing out, from boredom, from the illusion that doing something is better than doing nothing. Patience requires strength, not passiveness. It demands a mental structure rooted in confidence, not desperation. It is the expression of a trader who knows their edge, waits for it to appear, and executes without hesitation when the moment is right. Every truly successful trader eventually learns that profits come from sitting, waiting for the market to offer a clear opportunity, not manufacturing one through emotional turmoil. When you act from impatience, you are reacting to internal discomfort, not external market truth. When you act from patience, you are aligned with probability, expectation, and the overarching principle that the market is uncertain and unpredictable, but your behavior doesn't have to be. Patience frees you from the emotional traps that destroy consistency. It keeps you grounded when the market moves against you and calm when volatility tries to pull you into chaos. It creates space between stimulus and response, allowing you to choose clarity over impulse, and most importantly, patience turns your psychological energy inward, toward discipline, awareness, and control, rather than outward toward chasing trades that never truly belong to you. If you want to transform as a trader, don't seek more signals. Don't seek more confirmation. Don't seek more complexity. Seek patience. Because once you develop the ability to wait with confidence, once you can sit without forcing action, once you can detach yourself from the need for immediate gratification, you will begin to see the market the way consistently profitable traders do, as a stream of opportunities that reveal themselves only to those who are mentally prepared and emotionally balanced enough to recognize them. Patience is power. Patience is clarity. Patience is control. And when you master it, you stop trading from fear and start trading from truth. Your truth, the kind built from discipline, acceptance, and unwavering belief in your ability to follow your edge. Patience is the psychological filter that prevents impulsive, emotionally driven trades. It is the invisible barrier between you and the part of your mind that wants to act out of fear, excitement, urgency, or the illusion of missed opportunity. Every trader wants to be disciplined, consistent, and profitable, but very few realize that the single trait capable of transforming their trading is not intellect, not strategy, not timing, it's patience. Patience is what keeps you aligned with your edge instead of aligned with your emotions. Patience is what keeps you from chasing setups that do not exist. Patience is what allows you to act from clarity instead of chaos. Without patience, even the greatest strategy becomes a weapon turned against its owner. Consider what happens inside the trader who lacks patience. The market makes a move, a candle pushes fast, a breakout happens, and instantly the internal pressure builds. If I don't get in right now, I'll miss the move. Everyone else is making money. Why am I not in this trade? Suddenly, the trader is not responding to the market. They are responding to their own emotional discomfort. The behavior feels urgent, almost necessary. The market becomes a trigger, and the trader becomes reactive instead of deliberate. They enter a trade not because their rules have been met, not because their edge is present, but because their mind can't tolerate the thought of not participating. This is the root of impulsive action, an attempt to escape emotional discomfort rather than act on objective opportunity. Patience works as the psychological filter that stops this chain reaction before it begins. It interrupts emotional momentum and returns the trader to a state of neutrality. A patient trader does not react to every move. They do not feel compelled to insert themselves into market activity. They observe. They wait. They understand that the market offers an endless stream of opportunities, and missing one is not a threat. They've accepted that there is no need to chase, no need to rush, and no need to fear the moves they are not part of. This acceptance is what frees them from internal pressure. Patience is not passive. It is an active, conscious commitment to wait for alignment, clarity, and high-probability setups. The impatient trader believes action creates opportunity. The patient trader knows that opportunity creates action. This difference is everything. When you are patient, you stay aligned with your predefined rules and structure. When you are impatient, you abandon them. Impatience is the psychological state of a trader who has not fully accepted uncertainty. They think more trades mean more chances to win. More activity means more control. More involvement means more success. But in reality, impatience is a trap, one that slowly destroys discipline and blinds the trader to the truth that the market will always provide opportunities, but acting on every fluctuation will never lead to consistent results. Patience protects you from the two most dangerous emotional impulses in trading, the need to be right and the fear of missing out. When you need to be right, you jump into trades prematurely because you think you see something even when nothing is there. When you fear missing out, you chase the market because you feel that if you don't act now, you will never get another chance. Patience dissolves both illusions. When you become patient, you no longer seek validation from the market. You no longer fear opportunity slipping away. You trust that your edge will appear again. You trust that your rules will guide you. You trust that your discipline is more valuable than any individual move. Think of patience as emotional risk management. You manage market risk with stop losses. You manage psychological risk with patience. Every impulsive trade has a cost, even if it wins. It teaches you the wrong lesson, that breaking your rules can be rewarded, that emotional decisions can lead to profit, that impulsive behavior sometimes works. These lessons are disastrous. They reinforce instability, inconsistency, and emotional dependency. Patience prevents you from even entering trades that would damage your psychological foundation. It protects you from creating habits that sabotage your long-term development as a trader. When a trader acts without patience, they lose more than money. They lose control. They become reactive, scattered, pressured, and frustrated. Their mind races from thought to thought, constantly evaluating, doubting, reassessing. Their emotional state becomes tied to every tick of the chart. They feel the need to be involved constantly because inactivity feels painful. But inactivity is not the enemy. It is the training ground for patience. Sitting, observing, waiting. These are not wasted moments. They are moments where discipline is built. Patience develops in silence, in stillness, in the moments where nothing is happening, and you choose not to force something to happen. Patience is also the bridge between your trading plan and your trading behavior. You can create the most robust, well-thought-out plan in the world, but without patience, that plan will never be executed with consistency. Most traders know what they should do. Very few actually do it. The gap between knowing and doing is filled by patience. Patience ensures you wait for the setup that fits your rules. Patience ensures you don't front-run your signals. Patience ensures you don't exit early because of fear. Patience ensures you don't trail your stop too tightly because you want to lock in profit. Patience ensures you follow through on the structure you've built. Without it, you will always undermine your own edge. The deeper truth is this: impatience comes from internal chaos. A mind that has not accepted randomness, uncertainty, or the fact that outcomes are outside its control will always seek to feel in control. Taking action, any action, feels like an attempt to regain that control. But real control in trading does not come from acting. It comes from managing yourself. Patience is the ultimate act of self-control. It is the statement, I choose discipline over discomfort. It is the willingness to delay gratification. It is the understanding that the market does not owe you anything, and you do not have to chase it. Successful traders are patient because they understand the probabilistic nature of the market. They know that one trade does not matter. They know that missing a move is irrelevant in the long run. They know that waiting for high probability setups is what keeps their account growing and their mind stable. They know that every wasted trade drains emotional capital, and emotional capital is just as important as financial capital. Patience protects both. Patience also enhances clarity. When you are patient, you see the market with objectivity. You are not clouded by urgency. You are not blinded by hope. You are not pressured by fear. You are free to interpret the market as it is, not as you need it to be. This clarity gives you the ability to recognize genuine opportunity. It allows you to see the structure of the chart, the behavior of price, and the rhythm of the market. Impatience distorts perception. Patience refines it. At its core, patience is a belief structure. It is built on trust in your system, in your edge, in your discipline, and in the infinite nature of market opportunity. Patience says, I don't need to force anything because I know my moment will come. This belief liberates you. It places you in the psychological position of strength rather than desperation. It aligns you with the mindset of consistent traders who understand that trading is not about chasing the market, but about being prepared when the market aligns with your plan. To cultivate patience, you must shift your identity. You must stop seeing yourself as someone who trades to feel involved and start seeing yourself as someone who trades only when the probabilities are in your favor. You must stop seeking excitement and start seeking consistency. You must stop valuing action and start valuing alignment. This shift will transform your entire relationship with the market. In the end, patience is the psychological filter that protects you from the most destructive force in trading, yourself. It keeps you grounded, disciplined, and aligned with your edge. It transforms your trading from chaotic to strategic, from emotional to rational, from impulsive to consistent. When you master patience, you are no longer at the mercy of the market's movement. You become the master of your own behavior, and that mastery is the true path to long-term profitability. True patience comes from accepting uncertainty and waiting for high-probability market conditions. It is not a passive skill, nor is it some quiet, soft virtue. In trading, patience is strength. It is psychological power. It is the disciplined refusal to act until the market aligns with your edge. But most traders misunderstand patience. They treat it as something you use or something you try to apply when you feel emotional pressure. But patience is not a momentary behavior. It is a mindset built on a deep acceptance of uncertainty, an acceptance so complete that it no longer feels threatening. When you truly accept uncertainty, you no longer try to force the market to give you what you want. You no longer chase setups that do not exist. You no longer trade because you are bored, anxious, or afraid of missing out. Instead, you wait. You wait because you understand that your job is not to predict, not to force, not to control, but to align yourself with high-probability conditions and nothing else. Every moment in the market is a moment of uncertainty. Price can move up, down, or sideways, and no trader, not even the most experienced, has the ability to know what will happen next with certainty. This reality creates internal tension for the trader who has not accepted uncertainty. They instinctively try to avoid that tension by seeking signals where none exist, or by entering trades prematurely, hoping that action will relieve the discomfort of not knowing. This is the root of impatience, the inability to live peacefully with uncertainty. The mind revolts against the lack of control, and in that revolt, it pushes the trader toward impulsive behavior. True patience dissolves this dynamic. It allows you to sit in uncertainty without feeling the need to escape it. It transforms uncertainty from something threatening into something neutral, even normal. When uncertainty no longer scares you, you stop using trading as a way to relieve emotional discomfort. You no longer jump into a trade simply because the market moved. You no longer feel the urge to participate in every swing. You no longer cling to the illusion that you can catch every opportunity. You let the market be. You wait for the conditions that match your defined edge because you have finally understood something essential. Your edge is not present all the time. This realization is the backbone of true patience. The market is mostly noise, random movement, emotional reactions, institutional repositioning, and unpredictable volatility. High probability conditions are rare. They require alignment of factors, structure, liquidity, context, and timing. They require the market to reveal a specific set of characteristics that you have identified as advantageous. When these conditions appear, the patient trader acts decisively. When they are absent, the patient trader does nothing. This ability to do nothing is one of the greatest strengths a trader can possess. It takes far more discipline to stay out of a bad trade than to enter one. It takes far more psychological maturity to wait for confirmation than to act impulsively out of fear. It takes far more internal stability to accept the truth that the market doesn't care about your need for action or your desire for profit. Impatient traders treat every moment as a potential entry. They feel a constant pull toward involvement. They think the more they trade, the more they will make. They believe that activity equals opportunity. But in reality, impatience puts them directly in front of low-probability setups, emotional traps, and unnecessary losses. They react to market movement instead of responding to market structure. They chase breakouts that have no foundation. They enter trends too late. They buy resistance and sell support. They mistake volatility for direction. Impatience is the psychological engine driving all of these errors. Patience, however, is not merely the absence of action, it is the presence of clarity. When you are patient, you see the market for what it is, not for what you want it to be. You understand that just because price is moving does not mean opportunity is present. You recognize that randomness is not a signal. You become selective, methodical, and aligned with probability instead of emotion. Patience allows you to wait for your edge with confidence because you are no longer afraid of missing out. You no longer worry that this might be the only opportunity today. Instead, you believe, truly believe, that opportunity is abundant and recurring. This belief frees you from urgency. It frees you from compulsion. It frees you from the psychological noise that distorts decision-making. Acceptance of uncertainty is the foundation of this freedom. When you accept that the future is unknowable, you no longer demand certainty before taking action. You stop trying to predict. You focus instead on identifying conditions. You understand that your job is not to know what will happen next, but to recognize when the odds are tilted in your favor. This shift changes everything. Most traders lose because they try to control outcomes instead of controlling their behavior. They want guarantees. They want predictability. They want the market to behave according to their expectations. But the market has no obligation to do so. The only thing you can control is yourself, your patience, your discipline, your ability to wait. Waiting is not easy. It goes against human nature. Humans want closure, certainty, progress, and resolution. Sitting in front of a screen while the market moves and choosing not to act feels counterintuitive to the brain. The brain wants stimulation. It wants the dopamine of action. It wants to feel involved. That is why traders struggle to wait for high-probability conditions. They are fighting a biological impulse, not a trading problem. Impatience is a psychological addiction to action. Patience is the skill of breaking that addiction by grounding yourself in rules, acceptance, and a long-term mindset. Traders often underestimate how much emotional energy is wasted on impatience. Every impulsive entry drains psychological capital. Every chase, every premature trade, every forced setup chips away at emotional resilience. Eventually, the trader becomes discouraged, frustrated, or reckless. They begin to believe that the market is unpredictable or unfair, when the truth is that their own impatience created the conditions for inconsistency. When you operate without patience, you are always in conflict with the market. When you operate with patience, you move with the market instead of against it. High probability market conditions are your compass. They are the guideposts that prevent you from wandering into dangerous territory. They define the moments when you should act and the moments when you should sit still. When you wait for these conditions, you filter out randomness and noise. You eliminate low-quality trades. You preserve your capital. You preserve your confidence. And confidence, more than anything, is what allows you to act decisively when your setup appears. A patient trader enters trades with calm, clarity, and certainty. Certainty not about the outcome, but about the validity of the conditions that triggered the trade. That certainty comes from preparation, not prediction. It comes from discipline, not hope. It comes from patiently observing the market until structure aligns with your plan. When you wait for high-probability conditions, your trading becomes efficient. Every trade has meaning. Every entry has purpose. Every stop-loss has logic. Every take-profit has context. There is no random clicking, no emotional guessing, no desperate chasing. You move from chaos to structure, from reaction to execution. This is the essence of professional trading, not more trading, but better trading. Not more action, but more precision. Not more excitement, but more consistency. True patience is not something you apply when you feel calm. Anyone can be patient when the market is quiet or when you are not emotionally involved. True patience shows itself in the moments when you want to act, when the market tempts you, when a candle spikes, when volatility expands, when your instincts scream, "Get in now!" That is the moment where patience becomes power. That is the moment where your acceptance of uncertainty protects you from self-sabotage. That is the moment where you separate yourself from the masses and behave like a disciplined trader. The market rewards patience because patience aligns with probability. The market punishes impatience because impatience aligns with randomness. When you embrace this truth, you stop fighting the market. You stop fighting your own emotions. You stop fighting uncertainty. And in doing so, you step into the mindset of a trader who wins not because they know what will happen next, but because they know how to wait for the only moments that matter. The moments where the odds are in their favor and their mind is steady enough to act without fear or hesitation. A patient trader operates from clarity, discipline, and emotional neutrality, not from fear, urgency, or FOMO. This simple sentence captures one of the deepest psychological divides in trading, the difference between the trader who reacts to the market and the trader who responds to it. Patience is not just about waiting, it is about the internal state from which your decisions originate. When you are patient, your mind is stable, your perceptions are accurate, and your behavior flows from logic rather than emotional turbulence. When you are impatient, your mind is clouded, your interpretations are distorted, and your actions are driven by internal pressure rather than objective opportunity. The state you operate from determines the quality of the trades you take, the consistency of your results, and ultimately your identity as a trader. A patient trader sees the market clearly. This clarity does not come from superior intelligence or more indicators, it comes from psychological calm. When the mind is free of urgency or fear, perception becomes accurate. You are able to read the market without projecting your desires onto it. You see what is actually happening, not what you want to happen. You see patterns, behavior, structure, and context with a level of objectivity that an emotionally charged trader cannot access. Clarity means you are not influenced by the last trade, whether it was a win or a loss. Clarity means you are not worried about your P&L. Clarity means you are not watching the chart through the lens of wanting to make money right now. Clarity gives you the ability to wait for confirmation instead of guessing. It gives you the ability to recognize when the market aligns with your edge and to disregard everything else. Patience also gives rise to discipline. Discipline is not a forced behavior. It is not about willpower alone. In fact, most traders think they fail because they lack discipline when in truth they lack patience. Discipline emerges naturally when the mind is not in conflict with itself. When you are patient, you are not fighting internal impulses. You are not wrestling with fear or temptation. You are not struggling to override emotional urges. Patience creates inner stability, and discipline is the external expression of that stability. A patient trader follows their rules not because they must, but because they genuinely understand that breaking them has no benefit. They execute their strategy with consistency because they are not pulled off course by the illusions of the moment. They take the trades that align with their edge because they trust their process. They avoid trades that do not meet their criteria because they are not desperate for action. Discipline becomes instinctive rather than forced. Emotional neutrality is the foundation of both clarity and discipline. Emotional neutrality does not mean you are emotionless. It means your emotions are not in control. You can experience excitement, fear, anticipation, or disappointment, but these feelings do not dictate your actions. The patient trader operates with emotional neutrality because they have accepted fully that anything can happen. They understand uncertainty. They understand probability. They understand that outcomes are not guaranteed and that their responsibility is limited to executing their edge, not controlling the results. This acceptance removes emotional friction. It frees you from the roller coaster of hope and fear. It frees you from the emotional attachment to each individual trade. It frees you from interpreting market movement as a reflection of your self-worth. The impatient trader, by contrast, operates from emotional distortion. Fear shows up as hesitation, premature exits, or avoidance of valid setups. Urgency shows up as forced trades, early entries, or impulsive reactions to price movement. FOMO shows up as chasing candles, entering midway through a move, and abandoning rules because the mind is terrified of being left behind. Each of these emotional states short-circuits clarity, sabotages discipline, and destroys neutrality. When you act from fear, you are not trading the chart, you are trading your anxiety. When you act from urgency, you are not following your edge, you are following the pressure inside your chest. When you act from FOMO, you are not reading the market. You are reacting to imagined threats. A patient trader does not feel pressure to be in the market at all times. They do not equate activity with productivity. They understand that waiting is a strategic choice, not a passive one. They know that the market is an endless stream of opportunity, and missing one move means nothing in the long run. They recognize that the real battle is never with the market. It is with the impatient voice inside that says, "Do something now." Patience quiets that voice. Patience allows you to choose alignment over impulse. Patience gives you the psychological space to let your edge unfold naturally, instead of forcing trades out of emotional discomfort. Clarity is impossible when your mind is consumed by fear. Fear narrows your perception. It causes you to focus on the wrong information. It makes you see danger even where none exists. A fearful trader exits too early, avoids valid setups, or overdefends positions because they are acting first and thinking second. Patience dissolves this fear because patience comes from trust. Trust in your process, trust in probability, and trust in your ability to remain neutral even under pressure. When you trust the process, fear loses its grip. When you trust the numbers, the unknown ceases to threaten you. When you trust yourself, you stop reacting and start responding. Urgency is another psychological distortion that kills consistency. Urgency tells you that you must act now, that you must capture the move, that waiting is dangerous. But urgency is always a lie. It is not a signal, it is a sensation. It is created entirely inside your mind. The market does not create urgency, your interpretation does. The patient trader does not fall for this illusion. They recognize that urgency is a symptom of internal imbalance. They pause, they breathe, they observe, and in doing so, they regain neutrality. This neutrality allows them to break free from compulsive action and return to deliberate execution. FOMO is perhaps the most destructive emotional force in trading. It is the illusion that every move without you is a move against you. It is the belief that being out of the market is somehow risky. It is the emotional story that says, if you don't take this now, you'll never get another chance. But this story is false. The market offers endless opportunities. Missing one means nothing. A patient trader understands this deeply. They are not threatened by other people making money. They are not threatened by candles moving without their participation. They do not measure their success by how many moves they catch, but by how consistently they follow their edge. They know that FOMO-driven trades almost always lead to regret because these trades are born from emotional insecurity, not market logic. A patient trader is calm, observant, and deliberate. Their psychological energy is spent on reading the market rather than reacting to it. They operate from internal stability rather than external chaos. Their actions are minimal but meaningful. They trade less but profit more. Every decision they make is rooted in alignment with their rules and their edge. Every action is intentional. Every trade is a reflection of discipline, not impulse. Patience transforms your entire identity as a trader. You stop needing to be right. You stop needing to chase. You stop needing immediate gratification. You stop looking at the market as something that must give you something. Instead, you approach it with the attitude of a professional, calm, focused, objective. You wait for the high-quality setups because you understand that consistency comes from selective action, not constant action. You operate from strength rather than weakness. The patient trader understands something that impatient traders never learn. The market rewards emotional maturity more than technical expertise. Your success does not depend on how much you know, but on the state from which you make decisions. Clarity gives you accuracy. Discipline gives you consistency. Emotional neutrality gives you stability. Combined, they form the psychological foundation of a trader who is capable of long-term success. When you operate from clarity, discipline, and emotional neutrality, you are no longer at war with yourself. You become aligned. You become focused. You become consistent. And from that consistency emerges the true power of patience, the power to wait for what is right, ignore what is wrong, and trade only when the market gives you a genuine edge. That is the mindset of a professional trader. That is the mindset of someone who wins in the long run. In the end, patience is not just a trading skill. It is the psychological foundation that separates chaos from consistency. When you operate from clarity, discipline, and emotional neutrality, you free yourself from the emotional traps that sabotage most traders. You stop reacting and start responding. You stop chasing and start waiting. You stop trading from fear and begin trading from alignment. Patience is the quiet power that keeps you grounded in your edge, focused on high-probability conditions, and committed to long-term success. It is the mindset that turns trading from emotional turmoil into deliberate execution, and that transformation is what ultimately creates consistency and profitability.